From Forex Trading Unlocked. We are here on January 11th with a Forex market analysis for you. And just want to show you our disclaimer real quick to remind you that this webinar is for illustrative and educational purposes only. And also, if you haven't done so, please subscribe to our YouTube channel or our Twitch channel, Forex Trading Unlocked, or both. We would appreciate it. And pass it on to your friends. Make sure to like, share, and pass it on, please. And also check out the book, High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. Take a look at this slide real quick just to get that link down. And remember to please share it with your Forex friends out there and other trading people in the industry. We would appreciate it. All right, now let's get to the meat and potatoes of what we got going on here. All right, we have the Forex-Trading-Unlocked.com website pulled up here. We already, from the Market Analysis and Education tab, hit the Forex Trading Unlocked Workstation tab, and we are going to toggle down to take a look at what's going on. All right, so as far as the numbers are concerned, let's take a look at what's going on Wednesday. Remember, we do have the oil numbers in the U.S. Should aim to please with the oil pushing on through resistance right now. We have CPI in Germany, definitely may stir a little bit in the euro. We have industrial production for the EU. That will most likely give some action to the Euro US dollar, which has been basically range bound for the past couple of months. It's kind of trying to grind higher, but it's really more just kind of buffering up against the upper part of the range that it's been trading in for the past month and a half. CPI for the United States, that's a big bond number. I would expect that with the way the interest rates have been trading over the past couple of weeks, let alone the past couple of months, that this is another number that's going to really have a big impact on where the U.S. dollar may end up trending over the next couple of days. Remember that that interest rates are a form or a function of currency pricing. So with the 30-year and the 10-year hitting support, and seems like the bears have control of that market, that's giving a little upward pressure and strength for the US dollar versus many currencies. And then there's also the oil number, which we're going to be watching as well. So these numbers are very crucial to where we're moving forward. May cause a lot of pretty much range trade conditions for today. We'll take a look at what's going on, but I don't think you're going to have much of a trade this afternoon. I think everyone's going to be waiting on those numbers. We have a 10-year note auction also going on tomorrow. That's big for the fact that you have an auction going on at the same time with an economic number that's going to be weighing heavily on the action that's going on, and especially in the futures market. So how that will impact the cash market for the auction remains to be seen, but that means there's probably going to be a little shake-up with the liquidity factor there. All right, then we have, let's skip down towards January 13th. That would be on Thursday. PPI for the U.S. dollar. That's another big economic number, once again, that will have an impact like CPI. I would expect that both the CPI and the PPI numbers are, whether they hit the expected targets, that I can't, I'm not even going to bother trying to guess that one. But I do expect them to be much higher. And I believe that that is going to secure the trend moving forward for the next couple of months, which will help to dictate a lot of where the interest rates will go, as well as the U.S. dollar should trend towards as these numbers continue to, basically hurt the U.S. economy. Also, simultaneously, while this is all going on, besides a 10-year note auction, we have a 30-year bond auction that also, once again, will have a big impact on how that auction shall go off, most likely. All right, then we have January 14th. We have some numbers here that will affect the British pound. Industrial output, manufacturing output, and services. These are some economic numbers. I think that will probably stir up the pound. Which way, as far as beating expectations or not, that I don't want to really gamble on. I can't, considering the lockdowns and everything else, that's going to be a tough read. Now we have total trade balance for the EU. I don't know how much that one's really going to impact things. But then we have export prices for the U.S., retail sales, industrial production, retail inventories, and University of Michigan sentiment. The Michigan sentiment, at times it means nothing, at times it means a lot. So I think that with all these that are going to be released on Friday, that depending, especially if I'm correct in how the CPI and PPI come out over Wednesday and Thursday, I would assume that the retail sales were coming off that skew of Christmas, so maybe there may be some strength. Export prices, I would be cautious with that one because of the fact that the strength in the dollar versus many countries, at least the ones that actually do buy our goods, is not helping our exports as far as pushing the ability for us to, grow them, let alone get them out to begin with. Import prices, that may actually be a number that comes out perhaps a little bit positive because of the way the dollar has shown strength over the past month and a half. The Michigan sentiment, I don't even want to put a guess on that one. All right, so we're through all the numbers, if you will. So now let's get into the market analysis, which is what you guys are here for. I know that you guys are just like, okay, when are you going to get to the nitty gritty here, Teddy? All right, so we haven't been blowing it off. We just wanted to get through what is important for us to pay attention to as we get through the next 4 trading days. All right. So, Euro US dollar, obviously you can see, is making new highs on the day as we speak. Pretty interesting, right? So, we'll see how this pans out over the course of the day. Like I said earlier, I don't expect any major trend to not necessarily develop, but not to really be over-exacerbated, meaning that even though we're buffering up against new move highs here for the euro, as you can see, it's had a tough time with resistance. It seems to fall apart and fall off of it pretty much as quickly as it starts to develop. So notice how the high today has been slowly and creeping higher. Okay, so there's really not much momentum in this rally. Has it been rallying for the past 5 days? Absolutely. But when you look at where it's rallying from, let's take a little line here. If we go off of this low from back here around, what is this, 112.70 area, we're not even a full dollar higher, you know? So this is where, you know, you got to think like, well, wait a minute, you know, where is the strength here as far as bullishness? Now, does that mean that the market can't explode like incredibly higher and shoot up to 115? Absolutely not. That could happen for sure, you know. Anything can happen in the markets. However, like I said, I would take into account the fact that we have a lot of economic numbers coming up Wednesday through Friday that are very, very impactful of what's going on with the markets, okay? So, and we'll get into this as we cover some of the other currencies, and we're also going to show you how to kind of key off of the oil and interest rate market as we move forward in the week. For those of you that don't trade those markets, remember, it's not that you need to trade those markets, but it's good to know what, be aware of how they impact the currency crosses that you're trading. So as we get through the ones that if they actually are ones that you trade, then I would pay attention. All right, so this trend here, if you'll notice, downward sloping resistance has been holding this trend intact now already since the excuse me, since the end of September, okay? Or actually not the end of September, but the beginning of September. So since basically we've been going now here for 4 months, trending lower, making lower move lows, lower move highs. We skidded to a halt as far as hitting support back around Thanksgiving, November 24th. All right, so let's move this over here a little bit so we can get this line in here. And notice how I'm doing this on the Forex-Trading-Unlock.com website, live as we speak here. This is stuff you can do like when you're on vacation stuff. You don't got to expose your personal information and your trading account information. You can always check out the market, see what's going down, and even do a little analysis if you want. So, and obviously courtesy of TradingView for our technology. We appreciate them. All right, so we have the market as we are speaking, trading on its highs at 113.66. Overall, if we look at the performance indicator, it's been pretty mixed. You can see that from the past 3 months to a year back, it's been a negative performer. Okay, so the Euro US dollar, as far as strength, fundamentally has been getting hit pretty hard. However, technicals are leaning towards the buy. So this is what's going on as far as technicals, if you will. Fundamentals, remember we have dollar strength coming in because of the interest rate market. In fact, there's one way you can always check this. If you're not a futures person, you just go to the CME.com website And this is a great tool for those of you that, if you are not futures traders, but you want to get the interest. Now this is delayed, just like now our Forex information there is only slightly delayed because we're streaming. But when it comes to futures data, you have to pay for it, and you can't broadcast it live. Okay, so here we have, as of recently, within the last few minutes, because it's only a few minutes behind, we have a little bit of strength in the Treasury, 30-year Treasury bonds. Okay, so that would probably give us a reason why you're seeing a little dollar weakness, and only ever so slightly, because for the bonds to only be down 11 ticks, and considering how they've been trending, I would say that it's probably only a short-term little break. Now, if you go to our markets tab here and you hit futures, you can go directly to the 30-year Treasury bond market chart. Okay, so, and when you toggle down on like our workstation page, it will have the bond futures. Now this has it in the weekly already set up. We're going to take away the numbers here and the volume, make it a little clearer. As you can see, the week so far is off to a slow start. Okay, now let's get it on the daily so you can see what happened as of yesterday. Okay, so as you can see on Monday, which was yesterday, the market made a slightly lower move low and ended a little bit positive on the day. So that's 115.11. So that's where that was trading then. You can see now it's up 10 ticks, 155.21 in the 30-year. Okay, so what does that mean? That's probably why you went from yesterday being a down day, as you can see this, where when the bonds started the rally, now when interest rates go up in price, the interest rate is going down in value, meaning going lower. Okay, there's an inverse relationship. So when the interest rates are going down, that helps to bring in bearish sentiment into the US dollar, which helps to cause a situation like this. Now, it doesn't mean that just because the 10-year or the 30-year sells off, that all of a sudden that means you buy the US dollar, or vice versa if it rallies and then you sell the US dollar. Absolutely not. It just means these are definitely momentum indicators that definitely are usually fueling those trends. Does it mean they're always going to follow them 100%? Absolutely not. There's other forces. We're going to look at that, how that comes into play, especially once we get to the US dollar yen when it comes to oil. Okay, so not a lot of action going on here in the euro US dollar. I mean, we can go down to the hourly chart. You can see most of the action has happened since the US markets have opened. So dollar weakness, remember we have all these economic numbers, once again being bond numbers. With the auctions and stuff like that, I would assume that you're probably going to see a lot of buying pressure, because the people who are selling into the as the sellers are they're going to probably try and capitalize off of the auction. So I would think that you're probably going to see the market bid up into tomorrow's and Thursday's auctions, and then we'll see how things go. Meaning that you would see a weakness in the US dollar, which we are currently seeing with the euro US dollar. So how far can we go as far as a rally? Well, let's use this last major swing high and the swing low here. We love Fibonacci. Now this is something you want to be mindful of here. Let's see where Fibonacci has us. So let's say we get a 0.618 retracement. There's the high at 115 even. That's not that far off from where we're trading. The 50% move right there is at 114.44. So we're looking at basically only an 80 pip move to break out from the high that was set a couple weeks ago right here. And as you can see, this has been basically the top of the range since the market fell into this little band in mid-November. So from mid-November now going into almost mid-December, actually mid-December, we have 2 months of the market trading between, let's see, we have it as a low of around 111.83 to 113.83. So we've been in a $2 range. If we break out to the upside, does it mean that we're going to catapult and make a big rally? That's very possible. Now remember, should we take out this high at 113.88 if we continue to trend higher over the next couple sessions? I don't see it breaking out to the upside through there today. If we continue higher tomorrow, very likely we will pressure this area. We have this downward sloping resistance. It's also coming into this area. You want to be mindful of that, okay? So there's a lot of selling pressure that will probably be occurring here. A lot of your weak bears will have stops probably right below, between this 113.88 and 114 area. So if that is the case, you probably will see a rally get up to this 114.41. I don't think 115 even is really something that you're going to see in the next couple of sessions unless you see a really, really strong sell-off in the US dollar, meaning a big pound rally, and also other currencies, because you can see that the range and the strength in the euro US dollar, whenever it's exhibited strength or weakness, it really hasn't been very much as far as momentum over the past few months. So you don't want to think, I mean, you don't want to try and call a major breakout and then it doesn't happen, you know. So I mean, right now, could it happen? Absolutely. Your risk level here though is 112.70 for any bullish sentiment, okay? Should we hit below here again, remember that it's very likely that we will get closer towards this 112 even marker here. Does that mean we'll fall apart? Probably not, unless you see, once again, really large weakness in the US dollar. So we don't have a trade for you right now. We're waiting for a breakout. Just use caution, knowing that above 113.88, your risk is down to 112.70. Okay, so this would be a breakout play. So anything that comes back, if it fails to get follow through and comes back down here, you don't want to still be long when the market falls below 112.70. That would be very dangerous. Okay, plus the reward to risk ratio isn't there, because even if you get in right now and say, hey, I think it is going to break out to the upside, you're trading at 113.62. You're still risking 90 pips for a move that will go, I mean, you're looking for a move that'll go 138, to hit the higher end of your target range, if you're lucky enough to get it that high. Okay, so your reward to risk ratio there is not even 2, it's not even 2 to 1 there. So you want to always make sure you have at least a 2 to 1 reward to risk ratio. Otherwise, over time, you'd have to be successful most of the time just to break even, or maybe even pull a small profit. So remember, money management is huge. Read the chapter about money management in the book, High Probable Japanese Candlestick Patterns, available on Amazon.com. All right, now let's go on to the British pound, US dollar. Let's see real quick. Do we have any questions on Twitch? We do now. We have some followers out there watching. Thank you very much. We appreciate you tuning in today for this live webinar, and we're taking a look at what's going on. Let's see, on YouTube, we do have some followers watching there too. You guys are quiet on the chat. If you guys got any questions as we get through these currency crosses, I look at all the exotics for you as well. You just put a little marker on the thing and we will get to it, all right? So I'll be monitoring and watching that. Thank you for a couple of those likes and shares. We appreciate it, and keep it up, guys. All right, so we have the British pound US dollar. Now, unlike the euro US dollar, you can see that this market has been trending. This one is a bull. It's a creeper. This is a tough one. This is a grind, and you got to remember volatility in the British pound. We all know how that is. Like, it can go from being very, very quiet and not much action to all of a sudden having an explosive day where even the rest of the currency market may not be moving that much. Okay, so we have obviously piercing resistance. Dollar index is getting hit today, and this is interesting. Let's take a look at Dixie real quick. So dollar index is always in delay. This is where it was yesterday. Notice how this has been snaking along like this. It kind of looks like the euro US dollar, only upside down, while the euro, remember, is the biggest weight in the dollar index, right? So if the euro is starting to pressure this on support, okay, and we're making lower move lows, that would be interesting to see how this does or does not get follow through. So now with the euro acting like that, and now with the pound trending, making higher move highs. Now this is a big deal too, is let's take a look at where we're at as far as a level here. Let's just go to this breakout of these highs. See how this had become a failure rate? Boom, came resistance. The market just couldn't get above it. Boom, bounced off it. Now we are solid as we're talking on the highs, pushing higher move highs. Now it's not exploding here, folks, but it has a bigger range than the euro, and it's definitely trending into higher move highs. This was a little choppy area here where it tried to become support. It held up, and then boom. So this is a big pivot line here. So I would say for you aggressive bulls, if you haven't gotten into the trade around this 135, or basically 136 even area here, it's a good buy level. If where resistance becomes support, just like where there's support, it eventually becomes resistance. Oftentimes, if this is the case, then we are finding a good pivotal area for the British pound to stay above as the dollar falls under pressure. Now remember, we could be trending into a potential bottom for the dollar top in these other currencies as we hit these economic numbers. So today may be a blow off of these trends, and I would be mindful of this. Should we, like I said, get a big interest rate reaction come tomorrow, and also in the oil market as well. And this is something I want you to take a look at as well, is oil, since we're talking about the pound. So we go to forex-trading-unlock.com website to markets, and we go down to commodities instead of futures, which their commodities are futures, but they're those are futures are financials, commodities are obviously physicals. So here we got the crude oil contract. This is a futures contract also, so it's in delay. We'll check it out on the CME site. You can see it where it's a much quicker update. So you've had a short-term little pullback in oil as of Monday from Friday's high of just above 80, spiking there and settling in the 79. When did it settle at 79? Just below $79. But this is a tight trade. It's making higher move highs. It's lower on the day yesterday. Let's take a look at the CME thing. So when you go to the CME website, just like we did for the interest rates, you go to the markets tab, okay, and then you go to energy. And this will give you a somewhat current price of oil. Now remember, we're taking, now see, look at this. Oil is up $3 to almost $3 today. I knew it was up. I thought it came back a little bit before I was getting ready for this webinar. So it's back near these highs. So 81.20, this is interesting. If you guys watch TFNN.com when I do the interviews almost every Wednesday at 8:40 Central Standard Time, we always talk about the oil market and how it impacts these both the other markets as well as the currency markets. So now that we know how oil has been trading and now it's trading above its highs, this is good for the British pound. Remember that the UK controls a big part of the global oil supply. They have a lot of drilling off of the UK, Ireland, England, and Scotland, and all around the country, as well as around the world. There's places where the UK no longer is the sovereign leader, if you will, but they are still involved economically, especially when it comes to the oil industry. So when you see a big rally and a big strength for oil, when it's trending, making especially higher move highs in a big way, it's likely that even if you had a lot of US dollar strength, that the pound will not react so negatively versus the dollar because of the oil strength. So right now we have, once again, we have the 30-year that is slightly higher, which means rates are slightly lower, so that weakens the dollar right there. Then we add oil to that factor, so that gives you a little bit more strength in the British pound than we have in the euro US dollar. So for those of you that are wondering why is he dwelling on these things, I'm trying to give you the fundamental guidance that shows you why the trend is the trend. So you can see on an hourly basis, if you were looking at these other markets, this is where you're getting this strength today, where the buying dips is the way to go. Now, does that mean it's going to go all day long and stay that way? I don't know. Oil could totally reverse gears. I don't think it's going to happen. Remember, we have oil numbers that come out tomorrow. We also got a bunch of economic numbers that come out tomorrow. So now anything could happen, but with oil accelerating to new move highs, I would say that the bullishness of the British pound US dollar is going to remain. But let's look at some technicals now. All right. Irony of it all is that if we were to go here and pull up here's our 50%, and here's our 0.618. So this pivotal area just came out of above the 0.618 area for Fibonacci. So this is big. Could we have 100% retracement up to this area? It's very possible that we could, or we may have already hit the target and we're spiking into it right through it right now, ready for the fall back down on support. So we'll have to see how this market ends today. I would use caution, because even if oil has a little bit of a rally tomorrow and follow through, if the 30-year Treasury bonds and the 10-year notes start to sell off, especially very strongly, remember that they're hanging off their lows. If they sell off in a big way, that would give a lot of dollar strength. So that would put a pause on this rally. I wouldn't say that you're going to see a correction in the British pound US dollar, whereas in the euro US dollar, remember I said use cautious being long, because it could reverse gears very quickly. So now oil doesn't help them, because Germany and the rest of the EU, they don't produce oil, and they're oil dependent. So, and especially on the UK and on Russia. So we no longer supply anything to them. So that will be an impact on the euro as far as strength and weakness versus the dollar. The pound, however, remember, most likely will stay neutral to higher. So I'd be looking to buy dips in the pound US dollar over the next couple of weeks. Let's see how these numbers, we have a lot of numbers right now coming out the next few days. These are very serious to get through Friday. Then we'll have a weekly outlook going on and a mid-month outlook to see where the trends are going to either remain solid or most likely come into a turn. And this could really happen. Remember, should we see, once again, if we see a big sell-off in the interest rates, and unless there's a really, really big rally in oil, and if there is a slight pullback in oil, then you will see dollar strength come screaming back in a big way, and you don't want to be caught against the dollar in these kinds of reactionary environments. Okay, so now let's look at the US dollar Swiss for our last look of the European currencies. You want to talk about sideways. I mean, this thing's been like, it looks like a big chart, but once again, remember we talked about the euro, where that was for the past few months. Okay, well, let's go back all the way here to middle of August. So we have basically 90.90 or 91 cents right here with a high of 93.5. So a $2.50 range. This thing is just chopped around in. Now these look like there's big range days, but if you really look at them, I mean, here's 91 even, here's 91 half. This is a $0.50 range that this market chopped around in for 4 days. Look at this. Look at how brutal of a trade this was. So for range traders, if you've been trading the US dollar Swiss, boy, I guess you've been doing well. You know, just buying into lows and selling into highs, because there hasn't been much of a trend or breakout except for this one big rush here. Obviously a little pullback there. It's been trending here since the beginning of the year, but it's just going, it's pushing up. You can see it buffered up around the midpoint of the range, and look at now, US dollar weakness. So it's just chop, 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 chop. So right now this is going along with dollar index pressuring support, because you have the euro that's higher, you have the pound that's higher, and now you have the Swiss that's higher on the dollar versus the day. Obviously the US dollar Swiss is down, so that means that the Swiss US dollar is up. Okay, so we'll see. Is there going to be follow through tomorrow? I don't know. We haven't had much follow through in this market to bank on in a while. I would wait to see how it settles. Right now, the trend is your friend. I would use cautious selling into this US dollar Swiss break, but then I would also wait to be a buyer. I would wait for a buy signal, because remember, we're coming off of a higher move low, and we just made a higher move high even today as we speak. So this one's very neutral. All right, now let's get to another market that oil impacts. US dollar, Japanese yen. It's had a big sell-off the past few sessions here. It's been a little rocky. It's been a little rough, but that's how a lot of traders like it. Usually the yen gets nice trends, and we're very happy with what's going on. And now we're having an issue with the fact that we've had just a correction going on. It's not really a big deal, you know. So I would be mindful of that, and the sell-off should not be looking as, you never want to call a top. This is a short-term high, without a doubt, but we may have just set a higher move low as of yesterday. Today the market's only slightly higher. I think it's a digestion of the sell-off, especially with US dollar oil, or excuse me, with oil screaming higher today. It's going to be really, really hard to sell off the US dollar yen. Now, just for compliance sake, just to let you know, we are long the US dollar yen, but then I've been long the US dollar yen for most of 2021 going into 2022. So it's just been a matter of me nibbling off and then nibbling back in. So as far as that, so that's not new news for anybody, except for you, anyone that's a new viewer. All right, so where are we going here as far as support? Let's take off this last major swing low to this high. You can see it's not that much of a distance here. We're looking at right around, was it 112? Yeah, 112 half, up to just above 116 even. So a little more than $3.50 move there as far as the range. Now let's see, where are we at here as far as support and resistance? Let's go to here. Here would be our 50%, and right here would be our 0.618. Let's get this off the chart. All right, so as far as support right here, should this market continue to slide, which is it's very possible it could. This is the buy zone, support zone that we would be looking for, any extended sell-off. So what would bring us down to here? Remember, obviously, we're long here, so what we were bullish long-term, intraday, and I could still have a nice little hit of support. But once again, the oil trade is a big deal, especially for the US dollar JPY. So with oil trending higher, and if we follow through to the upside into the energy numbers with oil, and if there's a sell-off in the US dollar, excuse me, in the 30-year Treasury bonds and the 10-year notes, that will amplify the bullish strength in the US dollar Japanese yen, where right now we've had this sell-off. I would be mindful of this current high. If you're an aggressive bear, this is your key risk level. Anything above this 116.40 area here, or just above this high, is dangerous. We have 122 as our longer term upside target. Does that mean that we're going to be right and it's going to happen? Anything can happen, but right now the technicals and the fundamentals are all lining up. The fundamental fact of the oil trade that is on the table as we cross the $80 level and approach that, basically we're targeting a $100 oil, and should we get to that, that's very, very big in the sense that, you know, you gotta remember, Japan is a manufacturing country. Oil, you know, everyone's all about the Green New Deal and whatever. You got to kill the auto industry, well, in the oil industry. Well, killing the oil industry, the cars and that CO2 emission stuff that they're trying to get rid of and attack is only responsible for less than, you know, what, 6% of a barrel of oil. The rest goes towards lubrication for machinery that you use to build things and run high, you know, generators and things like that. Synthetics just don't work, you know. So, and these are things that are not going out into the environment. These are things being used in products that never touch the environment, you know. So, and also it gets recycled, you know. So that industry isn't as carbon negative as the world would like you to think, you know, and wiping that out is going to hurt the Japanese production moving forward. So these oil levels, remember, Japan has no oil. Any drilling that's even around Japan and in Asia, Japan doesn't have that. It's not theirs, you know. So this is very big. And with the interest rates, once again, if they sell off, meaning go higher, then this lower zone here becomes very improbable in the short-term future. Okay, we most likely will be breaching 116.40 here and heading up towards 117, maybe 117.5 over the course of, say, the next week and a half, something like that. I wouldn't say that we're going to have any type of big sell-off like this, or let alone any big rally breakout streak like we had back in this area here. I think it will be grinding higher, kind of like it's been doing here for the past month and a half. Okay, so be mindful. If you are bearish, your risk here is 116.40. Anything above there, you are probably on the long side, on the very wrong side. Now, as far as if you are a bear and we do have a little bit more of a beating down of support, be mindful of this area here. It'll be interesting if we would be able to get down to 114.45. This 113.98, basically 114 even area, I think is going to become heavy support. Remember, there was lots of resistance here. Then it started to become support. That was the weakness. Top breakout. This is most likely going to base if you have an extended bearish move. So be careful of that slide. And if you're looking for a buying opportunity, a good low ball, this would be a great area to throw in a low ball bid, and then your risk down here would obviously be this low here at 113.15, which I can't see. The only way I could see the US dollar yen getting anywhere near this level would be if you had a $10 sell-off in oil and you had a tremendous rally in the 30-year and 10-year notes, which could happen. Anything can happen, right? So we'll see how these markets go. Can't predict what's going to happen until these economic numbers come out. All right, let's go and take a look at the Aussie. Another little interesting currency cross, the way it's been behaving. This one had been trending very much so for the past year and a half with big trends, and now it's been choppy since the beginning of December. This has been a corrective move higher. We are overall bearish this market, especially in lieu of all the lockdowns and what's going on in that country, even as far as on a trade basis. Its inability to maintain its trade globally. So this downward sloping resistance here is definitely our key barrier as far as holding down this market. If we can breach this area, we'll be challenging this 170, or excuse me, the 72.81 area. If we were to get a rally above this spot here, do I think we're going to get a big one? Yeah, probably not. So we'll use a little fib here. Let's see where we're at. If you take the 50%, we're already there. Here's the 50, and here's the 0.618. Okay, let's get this fib out of the way. Make this chart a little clearer. So we have the highs here, which is your risk for any bear out there. But as far as a bull, how high can you go? Well, we could make a higher move high, breach this 72, 76, 81 band right here, but then where's your expected next resistance barrier? 73.41 here. That's now, could it trend much higher? Yeah, it's possible, but what would facilitate a continuation of this trend as far as fundamentally? Price of oil being strong helps to keep the Australian dollar from being a big bear. Does it make it a bull? Not necessarily. Not versus the dollar. We produce our own oil, so it doesn't really matter for us how much oil they have. Okay. They have other commodities, but if they're not going to market, that just causes more inflation and doesn't really help anybody. It just screws with the economy globally. So where does that leave you as far as strength and weakness? Well, I would follow the interest rates. So as we have stronger rates in the U.S., unless the Bank of Australia decides to start getting into a interest rate raising race with the United States, in which case then you could see the Australian dollar, US dollar gain a lot of ground versus the dollar. But I don't see that happening as of any time soon. You know, I think that we will see our US Fed raise rates a quarter point within the next 3 meetings, most likely. Do I think they're going to do it in the first one coming up? That's a tough call. I don't want to go there on that one. I think that in lieu of what's going on with lockdowns and the coronavirus coming back in the marketplace, there's a lot to digest. The markets are on their highs, so it's not the end of the world for the Fed to do that, except for the fact that the advanced decline ratio for the broad market as a whole has been in a bear market now for months. So there are some stocks out there and equities, equity markets in both the tech and physical area that could have a lot of issues over the next couple of weeks. Seeing a big sell-off in those things, will that rock the currency markets? Absolutely. So be mindful of that. We could expect a lot of volatility moving forward, especially when you have around economic releases. All right, so as far as being bearish, your risk here is the high, obviously above 72, 76, 81 area here. We are slightly bullish, looking for it to pressure resistance, but run out of gas. So we see it how it spikes. Like you can see how moving forward, since it bottomed down here, we had this high probable Japanese candlestick pattern buy signal here, 3 inside up, which, by the way, we've already hit the 50% buffer. And since we bobbled off this and had a lot of trouble, it would just make sense that as we come off this low here, we come in this area, fail, and then set a new trend lower. So how do we gauge that one? Well, let's put a little neckline right here. So we have this as far as upward sloping support, keeping this market up. Excuse me, and then we'll use this low here. If we fail from this low, this last recent swing low, that will have us testing support most likely down to 70.80, keeping this downward sloping trend intact. A failure from here, well, then it has us looking at big monthly new move lows in the forecast because it'll be in our sights. What could dictate something like this? I would say that, well, especially if the Fed raises interest rates anytime soon versus later, sooner than later, if the derivatives markets as a whole start pressuring rates to the upside, meaning selling off in pricing, and especially if you were to have a pullback in oil. If you had a pullback simultaneously with a rally in interest rates, that would put a lot of pressure on the Australian dollar, US dollar, meaning dollar strength and Australian dollar weakness. and have us back bobbling near the $70 or 70 cent level. Do I think long term it can get much lower than that? It's enough. That's a little bit hard to call right now. However, with the news and some of the new mandates in Australia, as this friction continues, if they start to see stuff like they have going on in Kazakhstan and a bunch of other countries and Turkey, well then I would say that Australian dollar, US dollar will plummet below 70 cents, and we'll probably see it down around the 65-cent area in a very short amount of time. Is that going to occur? I don't know. We'll see how much unrest and how much the government doubles down on what they're doing over there. All right, New Zealand dollar, US dollar. Pretty soon we'll be hitting those cryptos. I know you guys like learning about the cryptos and checking stuff. Oh, here we go. We do have a question. Anad Barak. All right, British pound JPY. All right, so let's leave the New Zealand, British pound JPY. All right, now this is a great question here. So we have someone on YouTube that has a question about the British pound JPY. Excuse me, the British pound Japanese yen. Okay, so now how do we break this one down here? Well, I'll tell you. I got a very interesting thing going on with this. We have a major trend to the upside. We are just coming close to this monthly high resistance level. What is driving this market? So, since we've been talking about interest rates and oil, here's a huge thing. So let's remove the US dollar equations and that interest rate market. Okay, so we know interest rates are a form of currency pricing, so that would have to deal with the Bank of Japan and the Bank of England. So Japan has been basically 0% interest rates for decades, and has had this policy of, I mean, it is what it is. I don't think that they're going to change their interest rate policy anytime soon. Are they going to be in a race to raise interest rates and compete with the rest of the world? I don't really think so at all, especially because it would be a competitive disadvantage. You got to remember, Japan relies on exports. So if there is a weakness in their dollar, that increases their exports and also makes their imports more expensive also. So is that going to continue to trend that way? I believe so. So now here, remember we were talking about the oil trade? The British pound equation right there is positive oil. They even drill all throughout Asia. Then we have Japan, once again, no oil. Remember, they're oil dependent. So that has us looking to pressure this 158.25 level, all right, Anand? I don't know if you're still watching or not, but this is where I think you're going to see this market get to. Let's pull up a weekly chart here. So you can see that we are buffering up against multi-month, multi-year highs right here, okay? Are we going to explode to the upside? Well, it's very likely that if you see oil go from, now as it increases in value above 80 bucks a barrel, now it's at, what was it, 81? Let's take a look at it. What was the CME Energy? It was at 81.05. Okay, just even updated right there. Just above $81 a barrel, okay? As it gets up to 90, and if it gets up to like $100 a barrel, you'll probably see, like here, let's take a look at this. So in October, this is September 21st. All right, let's go to our oil chart. Let's go to the daily. I think this is on daily. Okay, so let's go to, where do we say here was the marker here? So the pound yen here, this is September 21st. It's been trending actually since the summertime, but this was when we had a big move. So from September 21st to, oh, that's a 2020, excuse me, this is on the weekly. My bad. Let's look at the daily. Okay, there we go. All right, now it's making sense. All right, so we had this buy signal right here, this bullish engulfing line, which is a high probable Japanese candlestick pattern, which you can learn about if you read the book, High Probable Japanese Candlestick Patterns. This was here. It was also followed by a continuation pattern, which is odd, which that's a whole nother story. So anyhow, we based here. This was on December 3rd. Okay, so December 3rd. Oh, December 2nd. Look at that. This here is when crude bottomed, okay? Now remember, the British pound is an oil-producing currency, Okay, so we got 1 day before that market bottom, the pound yen, this trend started to emerge. Notice how it sold off on Friday and on Monday. Now it's back above 81 because now on the crude chart, remember this is in delay. Now you're trading at 81. This is where the market is today. Okay, and remember here, December 6th. So here's where the market had started a little trouble. It's still pressured here, but then the pound started to turn around. Once that oil market had based and started to break out to the upside, all of a sudden you started to see this market get a little wobbly. And now, U.S. dollar, see how the yen was trading, the U.S. dollar strength with that one, how that oil trade's going. So you have yen weakness versus the dollar, and since the dollar is strong versus the pound, you know, or excuse me, since the pound is gaining strength versus the dollar, that means that the pound is stronger than the yen because the yen is weaker than the dollar. You can always use, I always say the best indicator for the market is another market. Okay, so Anand, right now, if you are bullish this market, I am very confident that as these trends continue, long term over the next couple of weeks, that you should see this market make not only just multi-month, multi-year new highs, but see this market get up to at least 159. I would say probably 160 area before it starts to consolidate and look for at least a pause, a short-term correction. And I'd be mindful of how big the corrections you can see. I would see see how this one, it topped out at 152.63. It broke, what was it, $3 basically. Look for about a $3 break in the market. So should you get up to 159.60, see it pull back into this area where it's at right now, like this here now, where it's resistance, just like it is here, this is going to become a good support base moving forward as we go into February and March. I wouldn't doubt that you see this market trend higher, get up into this area, and then come back here, bounce support, and continue to trend higher, especially if the forecast is correct that oil goes to 100, and if the Fed raises rates at least once in the next like 1 to 3 months, this trade here should continue to go higher. So if you're a bull, I would say you're on the good side. Now, if you're a bear, all I can say is this last swing high, baby, this is your risk level. You do not want to be short above here. You're going to be scrambling. You're fighting a fundamental trend, not just a technical trend. I'm very positive you'll be on the wrong side. I think you'll be risking and throwing away money. Now, for an aggressive short, for maybe to look to see if this market could still come back and test support a little bit, then I could see it's a low risk sell where it's at right now with risking 158.25. Anything above there, you're on the wrong side. But from this little area here, if you sold it right now and we still hit support one more time to make a lower move low, you could probably have that quick scalp over a course of a couple sessions. But don't think you're going to get any type of truly valid sell signal for this market moving forward for the next couple of weeks at least. All right, so that answers your question, Anand. We're going to go now back to the U.S. dollar, or New Zealand dollar, U.S. dollar. And then we'll get to the cryptos. We haven't forgotten about the cryptocurrencies, guys. All right, New Zealand dollar, U.S. dollar. This one doesn't have quite the issues as Australia because they're not pressuring their people to the extremes that is going on in Australia. They're still pretty severe, but not to the lengths that Australia is. I would say that as the drag on the Aussie exists, this will put a little pressure on New Zealand dollar, but if the Australian dollar sells off harshly, this market won't sell. I don't think will sell off as severely. This market actually has a chance to get some bounces and rally against and go and diverge from the Australian dollar. Remember, they are two different currencies. They are two sovereign countries. They do not just go the same way every day, tick for pip. They do sometimes trend together. There's been a lot of reasons why they have been trending over the past year and a half to a degree, but without the same extremes. The Australian dollar has definitely been the one with more extremes. Right now, this is going sideways. It's riding support. I would say key off of, unless you get a rally above this little spot here around 68.57, this market's going sideways. It's a chop fest, and I would just stay away. And there's nothing with that New Zealand dollar crossed. Does that mean that you won't have any action in the other New Zealand dollar crosses? No, there probably could be. If we have any questions, you guys just ask him on the chat here, and I will be fine with talking about it. All right, so none so far, but that's all right. And just making sure. Oh, thank you very much for that little like there. All right, once again, if you guys don't mind liking and sharing, we would appreciate it. Now here we have a sell signal in the U.S. dollar Canada. What happened? Well, we took out this last swing low, which was a lower move low. And then we failed here, making this lower move high, which now becomes our new risk level should you be a bear, or as a bear right here. So we have that as our first breaker, and then the high here. Now what do we have going on here? Well, very interestingly enough, we have a shoulder right here. For those of you that don't see it sticking out at you, or know what that is, we have a head and shoulders pattern that has been confirmed as of today. Now we haven't gotten the close, but we have confirmed a head and shoulders pattern that has broken this neckline. So if you look at this right here, you see there's the shoulder and here's the neckline. Yesterday we had pierced it, we had closed above it still. Today we've fallen through the floor and we are locked on the lows. Remember, right now we're looking at dollar weakness in the short run going into the numbers over the next 3 days. So we're capitalizing on that right now. This, however, is a sell signal. Does that mean that we're not going to get a correction back up into this area and then hit support again? Doesn't mean that's not going to happen at all. However, I would be mindful of this sell-off. As the dollar has weakness right now, remember the euro, it's trending higher, breaking out to the upside, but super slowly. The pound, it's been trending higher to begin with versus the dollar, and it's just continuing to do so. Swiss, it's been going sideways for the most part, even though it is a little bit stronger than the dollar today. US dollar yen, though, however, we noticed that because of oil and interest rates, that it's not reacting. It doesn't have weakness. The dollar has strength there. Okay, so there, that one of the major crosses there, there's strength. Aussie, New Zealand, we know where they lie right now. And now we have this U.S. dollar Canada. Now you would think that with the rallying oil that we would have strength here. However, there's a big vote coming up in Canada, which is huge as far as what's going to happen with the Canadian economy, because it's going to dictate a lot of people not working anymore until they get their mandatory countrywide, everyone 100% has to get the COVID vaccine. They are voting in the next couple of days in the Canadian Parliament to overturn and suspend short-term certain rights in the Canadian Constitution, which basically would mean that for the next 5 years they can anybody's body and medical treatment becomes dictated by the state 100%. So whatever they say they want to do to you, whether it's COVID or whatever, they have that right to do so, and they will have the right to seize assets and other things should you not comply. That's pretty scary stuff. This is not conspiracy stuff. This is something they are voting on this week. This is probably why you're seeing US dollar Canadian slide right here. You're getting the strength in oil right now. Interest rates aren't a play here, but you're going to see this trend into that vote. After that vote, then it's going to be really interesting to see what happens. So I think this is going to be an exacerbated sell-off over the next few sessions as they go into their vote, and especially if oil continues to rally, we could see the U.S. dollar Canada get down to 125 or to 124 area. So let's see. We'll take this. We got the fib right here. Let's see where we're at. All right. So the 50% marker. If we go from the head, let's use this. Here's our 50%. And then here's our 0.618. All right. So we have just entered our target zone as far as just a correction from this high. Now, this head, we had a sell signal here. This is a 3 inside down sell signal. It's a high probable Japanese candlestick pattern, okay? So, and once again, read the book, High Probable Japanese Candlestick Patterns, available on Amazon.com, and you can learn how to trade these signals. So for this signal right here, just as forget the head and shoulders, we've already come into we already hit our target level already here over a week ago. Now, does that mean the trade's off? Absolutely. For that signal, this trade was done. It's consolidated, and we came back here and we made a lower move high, which has formed this shoulder now. Obviously, we pierced this neckline as of Monday's trading yesterday, and now today we are back below it. So here we are in this critical support area, which is the extended sell-off area for this initial sell signal, which is completed since it already bobbled around this on the support area. Does that mean this becomes a buy level? It's tough. We don't have a buy signal here right now. It's in a good buying area. However, since this has formed a head and shoulders, this extends how far this break may go. So as far as how far can it go? Well, if this is 129.68 and this is 126.21, that's $3.70. So another $3.70 down would put us at 123. We could actually make new monthly lows if this really presses the slide. What would bring that to case? If we see a big rally in oil, that's going to be a big deal, and especially with the new measures going on that will not benefit. Well, I wouldn't say it's a benefit to any Canadian citizen, because they can do anything they want with you then. They literally by law. So we'll see how that pans out and how that pans out in global relations. As far as the economy, I would say you're going to have a lot of problems with Canadian goods and services moving forward after this week, except for oil. You got to remember, Canada is a oil producing country. They're a commodity country, and that is the one. That falls under emergency use industries and what have you. So that's firing on all cylinders, and especially because they have to pay for all these lockdowns some way. They're not cutting off that nipple. They're not doing what the United States has done. So and especially since there is a slowdown in production globally at these pricing levels. They can afford to just clip along like they're doing and ride the tide and make all the increased profits right now. Their margins are exploding, and that's in lieu of losing the U.S. A year ago, or almost a year ago. It'll be a year ago in 9 days when the whole thing fell apart. So it'll be interesting right now. And for compliance sake, actually, we're also not just a bear, we're short the U.S. dollar, Canadian dollar, just to let you know. So like I said, we were long U.S. dollar yen. We have been for a year, just nibbling around on and off of it. And we have the U.S. dollar Canada, which we entered into today with the break. We had to stop into once it fell below here to enter into the trade. So right now we are slightly positive on that one. All right, so we've covered all these currency crosses for the Forex market. We don't have, we got XTI USD. All right, we got some first-time chats here on Twitch. Thank you, guys. Hey there, we got Incredible and we got Rewet33. All right, so for Rewet33, we're going to check out a cross for you. So XTI USD. All right, let's do it. XTI USD. All right, U.S. World Crude. All right, here we go. All right, so we are here on January 11th. Okay, and seeing how the crude market goes. So we're going to get, since we've been talking about this crude constantly, why not go through where we got the pricing. So we already said that we have $100 oil as our longer term price target. Actually, I got 150 going into before the end of 2022. Yes, you've heard it here. You can go back to our tfnn.com interviews where last year we called for $75 oil up to $100 by the end of 2021. We hit our 75 obviously months ago and bobbled around and came back, and $100 is not far off. So for you, my friend, our new first-time chatter and new viewer, let's break it down. All right, so we've already gone through as far as Fibonacci. We're heading much, much higher. Do we have any reason to think on a technical basis that we would fall back? Probably not right now. So what do we have as far as support? Okay, well, as far as trend, remember, when you have higher move highs and higher move lows, you are trending higher. When you have lower move highs and lower move lows, you're trending lower. So the trend is secure from the beginning of December all the way up into now the middle of January, where we had come off of, this was a lower move high, this was our first higher move low, then we came up to higher move high, higher move low, key area here, higher move high, we pulled back here, the low from yesterday, very key support there. I mean, look at where we're at. From 77.41 to 80.53, you're looking at a $3 move in the course of from yesterday's low to where we're trading at currently right now. So let's just look at it. Forget what we were talking about as far as my expectations as far as the long-term projection for crude. Let's forget about global COVID, what have you, and whatever. Let's just look at this for you in the sense of crude oil on a chart basis. So on the chart basis, we have it on a daily, obviously the trend is higher. On the weekly basis, obviously the trend is higher. So as far as a target here, 85, which is also one of our little short-term targets, is key resistance. If we get above 85, I see us buffering around, blowing through 85 and hitting up to around 90, 92 bucks a barrel. Then I think you're going to bobble around. Remember, where resistance becomes support, support becomes resistance. So on an intraday basis, we'll go back to the daily real quick. We have these last two swing lows here of 77.41 and 74.10. These are key short-term risk areas. So if you're a week long trading this, you would not want to be long below 77.41 would be an aggressive buy right now, looking for a continuation rally. If you were going to give it more of risk, then I would say from where we're at down to 74.10. But see, this is a big spread now. You're looking at a $6 move. So in order for this to really make you any money, if you're not already long this trade here, for the longer run, is you need to rally up to $95 to make it worth your while putting on this trade. It's probably better if you are not already long to wait to buy a dip. You may end up doing that with the pricing up above 85 and buying a dip as it goes on its way to 100, because this is what you need. You need the market to pull back and then give you here, like you had here. This here was a high probable Japanese candlestick buy signal right here. You had a bullish engulfing line after trending lower for 1, 2, 3, 4, 5, 6, 7, 8 days, which is also a fib number right there. So you had an 8-day break followed by this bullish engulfing line. So you had a fib buy here off this low, or temporary slowdown in bearish momentum, followed through with a bullish buy signal there, which then took you out above this high, confirming new move highs after a higher move low, which resets the trend into a bullish mode, which it has, and now it's continued to move higher. So as far as where we're at right now, like I said, I think we're going to continue higher, continue to work your longs. Definitely only if we fall below 74.10 would I be leery of this thing going sideways. Now, what would change? What would change this outlook? So remember how we've been talking about oil and how it impacts the currency markets? Well, now let's talk about, to end this for Rewet. Oh, you're welcome, man. We totally appreciate your questions here. So we're going to finish this little wrap up, and I hope this really helps you with inferring how trends work, especially when it comes to something like crude, okay? So right now, the fundamentals are there. We're making higher move highs, higher move lows. What would cause a change in this oil trend right now? The biggest thing would be if should OPEC and Russia come online and do what they did. Remember back when Trump was president and oil shot all the way down, where even in the futures the price went negative, it went below zero. Now, are we going to have oil get weighed back down to those levels? Well, it's not going to happen for at least 3 years, not after the new executive mandates, because there's a price floor now in oil of around $35 to $40 a barrel in the United States. So no oil is going below that price. Ain't happening, okay? Now, what could happen that would break this trend and then reverse gears, and this is all I want you to pay attention to if you're still here, Rewet 33. If you're a bull here and all of a sudden you hear that OPEC gets together and all of a sudden the Saudis and everyone else in OPEC says, we're going to turn the floodgates on, we're going to start pumping like crazy, okay? And then on top of that, Russia follows through with that as well. Do I see that happening? Absolutely not. Because right now they have the perfect storm. Because of the new market environment, they have, this is where it really gets it the best, is that they dumped so much oil on the market before, when Trump was president, before Biden became president. There was so many reserves where this stuff was all pulled out of the ground when oil was trading in the 20s and 30s, which now they're selling in the 70s and 80s, pushing 90s, because this oil is finally coming to market where they had a lot of reserves stored up. And now they're pumping at a lesser rate for a higher price. Their margins haven't changed, but their margins for production have not changed, but their profit margins are exploding. So why would they give that up? So unless they change their mindset, and as we're talking, we're making higher move highs, we're going to end on this note, is that unless that mindset changes, you will not see the trend change. The trend overall, no matter what, it has nothing to do. We could have all electric cars instantly, magically, poof, tomorrow or whatever. How about cars that ran on air, whatever, and they made perfect whatever in a fantasy land, whatever. That would not change the conditions of what's going on with oil. Remember that the oil industry, cars and transportation, is less than 7% of a barrel of oil. That's it. All the rest, they blame that the reason the price of vinyl albums is going up and there's a shortage of production is because of certain chemicals that they can't get and manufacture. You know what? That's not the case. You know what vinyl is made out of? Petroleum. It's a petroleum byproduct. Do you know what almost all your medical devices and things that you use on patients are made out of? Plastic, also made from oil. So the price of medicine, not even just the medicine, medical devices and things that you use in the medical industry are now going up incredibly inflated. Besides the business is inflating the pricing, the cost of true production is going up radically. So everything. And also, here's another one. You know how many medicines are derived from petroleum? Yes, that's something most people, you can look it up. Lots of medicines are also derived from petroleum byproducts or chemicals that are derivatives from petroleum and other things that become other compounds, whatever. This is chemistry. So you take a little bit out of whatever's in petroleum because there's an abundant supply of it to, create whatever else they're going to do. I don't know. I'm not a biochemist, but I do know that it's definitely used. So these factors are all going to drive this rally. Okay, so we ended on that. A little bit verbal, probably a little more than you wanted to know, but if you took it all into account, these are things, these factors, I promise you, will help guide you and keep you on the right side of the trend. All right, so thank you. Great question from Rewet. Hey, we're going to reach out to you and add you as a friend here. Hopefully you reciprocate. We got you also here. Let's check on YouTube. All right, let's see. Do we have any more questions here? Got some likes. No more questions there. Hey, we'd like to share too. Thank you. Appreciate that little comment. You guys are great today. Got a nice little interaction here. All right, so we just did the XTI USD. That was a great question from one of our new followers. We will definitely follow up with our webinar that we have tomorrow also for you as well. All right, now let's check out the cryptocurrencies real quick. BTC USD, all you Bitcoin bulls, what is going on? Not off to a good start in 2022, huh? You thought that support was great around 55,000 for a while there. That didn't last, did it? Well, we're not necessarily bearish on cryptos. We just know that it needed setting a new little trend. Now let's see, as far as new trends, we're going to use this 52,000 has been kind of a magic number for Bitcoin as far as a target to the upside, and thought that was going to be a support base by many of the Bitcoin pundits, if you will. So let's go from this high back here. We'll use this lower move high here. You can see the downward sloping resistance is holding this trend intact. Does that mean it's going to continue? Well, we never want to try and call a bottom. We have a nice swing low that was made yesterday. Look at that. Bitcoin down at 39,690. Knew I should have sold some of that stuff off a couple months ago. So now I'm stuck with it. No, I'm not stuck with it. I can get out with it right now, but no, I'm waiting to actually get out of some of it, in the mid 50s and ride that wave take a little profit as it goes up higher, and at least lower my position, if you will. All right, so what do we have here in Bitcoin US dollar? We have a trend that's going lower. We don't have a buy signal. We don't have a reason to say, hey, time to load up. We're looking for a rally up to at least 4,700, 5,200, challenges swing high. So just like we mentioned before, and as a reminder, remember, lower move lows, lower move highs is indicative of a bearish trend. Right now, we continue to we made a lower move low yesterday. We are coming off a lower move low. We have no reason to buy yet. To some degree, we could possibly, if the Bitcoin market settles the way it is right now, you could say this is a short-term, I wouldn't say necessarily buy signal, but pause for the trend, because you do have a small bearish engulfing line followed by a doji. Okay, so for those of you who aren't familiar with what I'm talking about, read the book High Probable Japanese Candlestick Patterns, available on Amazon.com, which is written by yours truly, by the way. So this low right here, this is called a doji right here. So this is not necessarily meaning that you're going to have a complete trend change, but it typically does mean that you have a short-term pause in the trend, which obviously this is occurring right now since it's made that low yesterday into today's trading. So let's say that this is just a short-term pause in the market, okay? Where can we go? Well, if it was just a doji, I would say it's probably not that likely to get much momentum. However, since it's a doji, and if this does truly become a bullish engulfing line, which if it's settled right now, it would be considered that, that would add value to not just the pause in trend, but to a nice corrective move higher. Remember that since this market has been trending lower, and confirming it, this market is in a short-term bearish trend. All right, so where does this go up to? So the 0.618 is here, and the 50% is right there. Let's get this. I'm gonna get this out of the way, make it clearer for you. Okay, so as far as a Fibonacci basis, if we were to get just a correction, not a change in trend, but just a short-term correction where we're coming off this lower move low to set a future lower move high, this would be a good area. Now, interestingly enough, by attrition, if we just go sideways and trend up into this thing, we're going to take out this downward sloping resistance line. Does that mean that the trend changes? No, it would just confirm strength in this correction, but even still, just beyond, especially the more time passes and we breach this line, well, then this becomes a real viable resistance area for us to set a lower move high, or maybe just the upper end of a range where before we start to go sideways like this. Could this be the bottom for Bitcoin for the next 3 months, 6 months, 6 years? Possibly. Very possible. I don't think so. I think right now what we have is just the conditions that are right for a short-term bounce. We're going to see how it's affecting Ether and a couple other markets as well. All right, so where does this go? Like I said, our target is 45.8 to 47.2, somewhere in this $500 range. I don't expect a rally above that anytime soon. One of the reasons why is, see this little area right here? Remember how support becomes resistance, resistance becomes support. If that theory is true, that would be great for us. See how we had been support, 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 boom, support, support, falls through, bearish, newer move lows, confirmed, grinds here, it's basing. Now, right here, we have downward sloping resistance. We have an upside target area right there, and we have only a slightly weak change in trend, short-term correction buy signal going on here. We don't have a very strong buy signal here. We just have a pause for the cause. So I would say bearish momentum is here. It's very likely that we could come up into this area here and then fall back here and test support again before maybe we do turn around and make a big rally. So I would say, as far as, let me give you an idea, we're most likely going to come up into here and then probably bobble around in this area here before we either go this way or come off and go this way. Okay? Now, is it going to happen all the way out here? I don't know, but this is what I'm saying is you're very likely to top out in this resistance area and then churn around just like you did in this little spot here, and then either have another leg lower or finally break out through this little area and then come up to challenge 52,000. This is the real area to cross. You want to get bullish Bitcoin, you want to know when you're going to get a big breakout and start to see some nice little moves above 52,000. Anything above here, very likely to be pressuring the 60,000 area and make a run for new move highs. Is that going to happen in the short run right now? I don't think so, especially because you have now, this is the first time where Bitcoin exists and the interest rate environment, which I know interest rates have nothing to do with Bitcoin, but they do with the other markets. The value of the dollar is indicative of interest rate functions and pricing. So that will impact how much dollar value there is also for Bitcoin. Okay, so it's very interesting how this is going to interweave itself with the financial system more and more as we come off this zero interest rate policy that we've had for years, and now we're going to be going to a, hey, guess what? It's at least 3 hikes that we can expect because the Fed said so. They're most likely going to raise 3 times over the course of this next following year. If it goes higher, well, then you know what? As far as number of interest rate hikes, well, then expect a bigger rally in the dollar as well, relatively, depending on if it becomes an interest rate race with central banks. We'll see how it happens. All right, now let's go to Ethereum, US dollar. We don't have any questions on any cryptos from you guys. You guys are still hanging on, paying attention, watching. Thank you, appreciate it. But no questions. All right, so if you don't have a question about any cryptos, let me continue here with the Ether US dollar. So remember where we had a slight little buy signal, a pause for the cause with Bitcoin? Well, I always say that even though it's not the dollar index, Bitcoin is kind of like the dollar index in a sense when it comes to the crypto world. If that's the case, Ethereum is kind of like the Euro US dollar or the British pound of the dollar index. And what is it doing? This is interesting. So this market has been making lower move lows and trending lower just like Bitcoin. However, this one here, when it bottomed out yesterday, it didn't give us a doji. Just made a lower move low. But we have a nice bullish engulfing line here also forming. So this would be a double confirmation of 2 major cryptocurrencies. Now the market's not closed and moved on to the next day. I mean, this never closes, but it hasn't rolled to Wednesday's trading. When it does, and this bar is completed, should it be like this or higher especially, that would confirm a short-term buy signal for Ethereum US dollar. So let's just say that this signal does come through today. How far can we expect a rally for Ethereum? Well, I'll tell you what. We could go 50% is here at 3,900, and the 0.618 is up here around 4,100. So interestingly enough, if you look at it, that's a nice return. If you look at that from 3,000 up to, even if we just get to 4,000, that's a 25% move. Okay, let's go back to Btc USD. Remember this one here, we're not looking for much of a move. We're looking from 42,000 up to, let's say it tops out at 45.8. Okay? You're looking at a $6,000 move there. Well, that $6,000 move in Bitcoin or ETH US dollar, we're looking at a $1,000 move here. This is 25%. BTC US dollar, a $6,000 move here. A 10% move would be 4,000. Okay, so a $6,000 move would be around 14, not quite 15%. So everything is relative. So let's say even if these cost the same amount of money, your expectations to the upside, considering this trend and everything else, the trend dynamics, you have less bang for your buck with Bitcoin than you do with ETH US dollar. So does that mean I would tell you don't buy Bitcoin, buy Ethereum? No, what I'm telling you is that should we get the same expectation that both markets are truly setting a base and a buy signal, and they both get an upside correction. Remember, lower move lows, lower move highs, lower move lows, lower move highs, lower move low, blah, blah, blah. You can see trending lower, right? We're never trying to call a bottom or a top in a market or a change in trend until you have a lot of confirmation. We have no trend change confirmation. What we have is a short-term pause in bearish momentum with the likelihood of seeing a corrective move higher. Always keep these, how you say things and what you is what you believe. It's what you believe is what you perceive, okay? And you have to stay on track with things and be in clear communication with what is really happening. Just because you're rallying, it doesn't mean that you're in a bull market. You can be in a corrective rally in a bear market. So always be mindful of, are you in a correction or are you trading? There's the action of the trend and then there's the reaction, which is the corrections, okay? So right now, now, does that mean that a correction doesn't eventually become a complete trend change? Well, of course it does. Eventually, you are going to have a top and a bottom. We're not trying to call a top or a bottom in the major trend, okay? We adjust as things go on later, and then we have reasons, which we don't have right now, to show you. So, once again, this is our target area. Look for this little move here to evolve. Should we get the close today, and then moving on into the later on this afternoon as we roll into Wednesday's trading for Ethereum. Should we close like right around here? I would expect some follow through. I would key off of this low from yesterday. This is your risk level right here, 2009.29, or I would say maybe just a little bit lower. I would say just maybe like $50 lower or something like 25, $30 lower. This is your risk area. Could we come down it and take this out? Absolutely possible. Could we come back, touch it, and then rally? Anything's possible. Right now, though, according to, we have Bitcoin that has a potential buy signal. Ethereum has a complementary potential buy signal. We'll see how this manifests come the end of the day. And then we'll know whether we have the likelihood of getting this correction up to the upside. I hope we do. I don't know if it's going to necessarily change to a bullish trend overall, but I would like to get rid of some of my Bitcoin back up in the upper 40s to lower 50,000 area. Not that I'm not confident that it couldn't go to $1 million one day, but I'd like to nibble away here and there and get something for in case the whole thing goes into a bear market for the next year. Who knows? There's a lot of things going on with lockdowns and where cryptocurrency is being embraced in many parts of the world is being shunned elsewhere. So we never know how this axe is going to swing. So trading it, I look at it as it's just another number that I'm buying and selling. Okay. So Ethereum US dollar. Let's move on from this one. Let's look at the XMR US dollar. Monero. Okay. Interestingly enough, this one has been also trending lower, but kind of grinding and bouncing off support here. It's found a good base. I've been saying this for a long time. The value of the technology for Monero and its longevity moving forward. One of the key fundamentals it has is that it is a viable technology, and the pricing structure between 180 and 220 is a very good buy. I think that as far as a short-term store of value or in a short-term trade or even medium-term investment, if you can get long between where it's trading now up to 220, you're in a good buy area. I would use caution once it gets up to this 300 to definitely 350 area. That would be a place where I would say it's a good place to nibble off if you've bought in anywhere down, especially in this 180 to 200 area. It gets to 300, definitely 350. I would take some profits and then look to nibble back and wait for another break. I don't think it's sustainable to trade much higher than those areas. If you look at how it did get up to 520 back in May of 2021, this was a very exacerbated area. However, you can see that support definitely lies right around where we're at right here. So now, should we fall below this 180 area, does that mean that it can't trend lower? Well, this isn't a bear market. It could very easily make a lower move low. We're coming off a lower move high on a weekly basis and a monthly basis and a daily basis, so the trend is bearish. However, right now, short run, do we have a buy signal like we have in the other markets? No. But interestingly enough, we did set a lower move low yesterday. Now, today, we look at this, what's going on here. We'll have to watch and see how the close is. We may have a short-term pause signal, not necessarily a buy signal, but a short-term pause and trend. Looking for a good follow-through signal tomorrow. So we're looking for a possible double confirmation here, to where, yes, we may see a nice corrective move to the upside. Do I expect it to shoot up above this higher, lower move high and continue up to 300, 400? Not in the short run. I could see it getting back up to 220, 240 and running out of gas, though. That's very possible. So I do like it in the short run. I am slightly bullish, but slightly. Now let's look at the Doge US dollar. I look at the Doge coin now just for, it's kind of like a giggle factor for me. This technology has no future. Does it have a future as far as speculative interest? Yeah, probably. There might be some people that are now like, okay, it's down so much now, I'm going to keep on buying it, and I think this thing is going to keep on trending down to zero. It's in a bear market. Irony of it all today is if it does settle a little bit higher, we're looking at a short-term corrective move buy signal setting up. Interestingly enough, is we bottomed here in December, and we traded around. We set this lower move high here. We were kind of neutral. We did come and make this lower move low. But if you look on a longer term, here's this lower move low. We have this lower move high. The low of yesterday, if this becomes support, if you're an aggressive bull right now, you're in a good buy area. Anything below 1370, meaning 13 cents, you're grinding through support, and I can see this thing crashing down to like 7-8 cents. Short term, though, if we settle, especially right where we're at now or slightly higher, that would be a short-term bullish engulfing line buy signal. I would be looking for a corrective move, not a trend move, that will give you a yield of probably up to, let's see, an extreme of, here's this 0.618, and here's the 0.50. Okay. Oops. Let's just move this over, get rid of this. Okay. So up to 1787, up to 1878, almost a reverse. So you got about a 1 cent area that this could possibly rally up to, but that falls short of making a higher move high. I would say that you really need to take out this level here at 1957 to confirm a basing scenario where maybe you can get back up above 22 cents to 26 cents. I just don't like it. I don't see a future long term. I think this is just a pump and dump meme coin that is people still try and sucker people into, saying, kind of like, if you liked it at 25 cents, you're going to love it at 15 cents. And if you loved it at 15 cents, you got to love it even more at 13. Well, there's a lot of stories that don't end well when you're looking at that kind of an outlook. All right, Euro US dollar. Let's get back on track towards the FX markets. Since we've been talking, the dollar has gained a little bit of strength. It's come back a little bit. What do you know? Well, that's where we're at right now. You can see, like I said, you don't expect much follow through in this afternoon's trade. We got a lot of numbers coming out tomorrow. I think you will see volatility. Be careful. The algorithms are going to be kicking up their heels. Keep your stops tight. If you're in a trade already, you got your stops in, your targets in, you're all good to go. Leave it and see what the market does and brings you. Hopefully it brings you lots of profits. But I would use caution trying to jump in front of any trades right now. You saw the ones where we have signals. We're waiting for some confirmation. We'll let you know how that goes tomorrow or maybe later this evening. We'll see. All right. So thank you very much for your time today. And I want you also all to remember, if you don't mind, to make sure that you subscribe to our Forex Trading Unlocked YouTube or Twitch channel or both, and share it with your friends in the online trading community. And check out the book, High Probable Japanese Candlestick Patterns, so you can learn how to trade these signals that we've been talking about today. All right, thank you very much for your time once again. Good luck in all your trading. I'm Teddy Keckstedt from Forex Trading Unlocked.